Happy Easter, everyone. Today, I want to talk to you about the CARES Act, and in particular, I want to talk to you about the recovery rebate payments that many of us are going to be eligible for. According to the Internal Revenue Service, over 90% of us, in fact, I think the number is approximately 93% of us, are going to be eligible for these payments. Now, the payments are in the process of being issued by the federal government. What are the requirements? Well, here they are. If you're a married couple with an adjusted gross income of $150,000 or less, or head of household with an adjusted gross income of $112,500 or less, or a single filer with an adjusted gross income of $75,000 or less, you're going to be eligible for a $1,200 payment. For a married couple, it's times two, a $1,200 payment for both the husband and wife for a total of $2,400. Also, if you have a dependent who is under the age of 17, you'll be eligible for up to an additional $500 per dependent. Now, if your income exceeds that amount of money, then they're going to reduce that amount. For every $100 that you exceed that amount, they'll reduce your payment by $5. What's it going to be based upon? Well, if you have filed a 2018 return and not a 2019 tax return, they'll base it upon 2018. If, on the other hand, you have already filed your 2019 return, they will base it upon 2019. Now, if you haven't filed your 2019 and you would not be eligible under your 2018 return, you're well advised to go ahead and file that 2019 return right away. Let's talk about a few other things with respect to the payments. First of all, it's important to understand that the payment you're going to receive is not going to be taxable. Second of all, you need to understand that it is actually a credit against your 2020 income tax return, even though it's being payable based upon your 2018 or 2019 return. What does that mean? What that means is that if your 2020 income is lower, at the end of the day, they will true it up based upon your 2020 income. Now, the good news is, though, there will not be a clawback provision, so they will not reduce your award based upon your 2018 or 2019 return if it turns out that your 2020 income was too high. They're not going to go back and force you to reimburse them for it. Second of all, with respect to the bank account that you identified on your tax return, if you identified a bank account, the IRS estimates that 50% of us have direct deposit on our tax return. If you've identified a bank account, the money will automatically appear in that bank account. And that's going to happen fairly quickly. If, on the other hand, you did not do direct deposit and you typically get your refund by a check, your payment is going to be delayed. Ultimately, it's going to come to you, but it's just going to be delayed. Now, the IRS is going to issue some guidance for all of us to update our bank account or to add a bank account. They should be publishing that information sometime over the course of the next week. Also, if you want to update your address, you can fill out a form. It's called Form 8822 to update the IRS with respect to your address. Lastly, if you're a dependent and you're in college, even though you are over the age of 17, if you're being claimed as a dependent on your parents' return, you're not eligible to file on your own. If, on the other hand, you're no longer being declared as a dependent, you can file your own claim for the $1,250. So hopefully that gives you some quick information regarding the program. If you have any additional questions, we're here to help. Just call Goodharf Law Group at 937-898-5583. Thanks and have a good day.